There's carnage in the momentum markets. It's brutal and it's quantifiable. The amazing statistic that for companies that have put on between 100 and 700% in the last 5 months, on average, this group of companies are down 40% right now from their highs. The interesting and most crazy part of that is that it's not done yet. And that's what Gary's going to explain to us. Gary, that's a huge stat. And given where we are in the cycles, I'm really interested to hear more about what you put forward in your report. How are you on this crazy Tuesday morning?
Good. It's funny actually. I sort of when I saw that stat, I thought it was pretty like an amazing statistic. But it is really a momentum based sort of statistic as well. Like we know like this is this market's gone straight up here for 6 months. There's been some massive moves in the NASDAQ and equity markets in general. It's gone up pretty much from April to October there, pretty much in a straight line without, I think we're talking about there wasn't any more than 3 or 4 down days in that whole period, like 3 or 4 days might be the most we saw. So we're hardly seeing any down days. So very, very, very sort of strong period there. But in those mentor names, we know something called the 50-80 rule. So once they're done, once they sort of, the stocks have those really big, 100% gains plus, once they break down, they're normally looking at 80% of those companies will come back 50%. Then 50% can actually have that sort of 70 to 80% decline. So there can be some really, really big declines. So the fact that those biggest movers from that, I think it was from August to October.
Yeah.
So all the companies that had between 100 and 700% gains that period, or just above 100%, on average they're down 40%. So that's an alarming stat. That's actually short of the stat. So it tells us that there's a lot of damage being done here already. But index really hasn't sort of come off that much. It's gone off a little bit, but not too much here. So it can definitely come off a lot more. So we know generally that we should be looking for at least 50% declines from those names there. So we want to see all those biggest names sort of probably off at least 50%, because I know some of them will come up a bit more. So that does tell us here that although there's a lot of damage being done here, it's still probably shy of where history sort of says that we should come back to. So, and that you can see here on the NASDAQ here, just looking at, again, this momentum again as well, is that what I've highlighted there is each time the index, the NASDAQ has closed below the 50-day moving average, we've had a pullback. Sometimes those pullbacks are only small, but sometimes they can be quite large here. Now, we've just had one of the larger moves up here above the 50-day moving average. So potentially we might get sort of something, at least on the medium size, at least, Chris, as well. So it just kind of tells us here that from momentum point of view, we've cracking the 50 is a bit of a negative thing. And we know portfolio managers in general will be a bit lighter on or a bit more cautious there. And a lot of traders and portfolio managers will have some weightings, rules around how heavily they can be above and below certain moving averages. So the fact that we're below the 10, 20 and 50-day moving average is normally pretty negative, and that probably will be telling a lot of portfolio managers they should be light on. So that's
increasing selling, increasing cash reserves because the market is below this blue line, the 50-day moving average. That's just a standard metric that a lot of fund managers have. So it's not you saying this, it's what just momentum traded for the last.
Yeah, that's right. Yeah. And we can see that too. Like because every time we do close below it, sometimes we can have small corrections, but oftentimes we can have fairly decent sized pullbacks there. But then once you close back above it, then that's when momentum traders will sort of start to come back in only after it sort of comes through there. So they look for these what they call these follow-through days, but also looking for, just to be above the moving averages as well. So, but that tells you here, even though we've had a pretty nice bounce the last couple of days, Chris, we're still below the 50-day moving average there last night. So we've come back probably just within 1%, or probably even tighter than that at the moment. So probably tonight will be pretty telling here as to whether that, whether we can get a
Hold it.
in a moving average
Bubble,
or
yeah, or
break down. Yeah, maybe something people are watching there. I think, if I'm not mistaken, I think there's a bit of data out tonight and tomorrow night as well. So I think there's some PPI and some CPI data coming out here as well. So yeah, it'd be interesting there. And everyone's gotten pretty convinced that we're going to get on the rate cut in the States as well, even though last week the odds were about half. So within a week we've changed. We've almost doubled the probability, but that's okay here. But yeah, so just got to be pretty cautious there. I think the S&P 500 is a really interesting chart because that's every time we've had a bit of a breather there, and this is a bit of a key level we're starting to break down here, then with each pullback in the past has come back and sat on top of the previous high. And so if we're having a bit of a breather here, have a pullback there, then the previous high is around that 6,100 level there. So that's, I think I measured it out around about 7% lower here. So I still think, that's not a crazy move either. That's just us having a bit of a breather and come back and sit on top of the old high. That leaves us in a position to, as we know, we come back and sit on top of the high, leaves us in a pretty healthy position to go back up potentially to a new high here. So even though we've got bubble talk here at the moment, everyone's getting a little bit, just some people are getting a little nervous here. Even just having a 7% pullback to the old high, that still leaves us in a pretty strong position longer term. And maybe this AI and a themed bull market here bubble can bubble on to slightly higher there, because we did finish the NASDAQ and the S&P 500 did finish just shy of a prior squaring. So, and sometimes when I see that, I think, oh, it's just pulled up short of it. Sometimes in the old days, I used to wait for those squarings before I go short, and sometimes they pull up, 1 or 2% before, and I thought, oh, that's not good, and it leave me not ready to go. But then they pull back, but then they come back and actually hit it later on. So yeah, so it can actually still have a pullback shy of it and then come back here. So so we still might have a bit more of a breather here. So look, I still think the market's interesting sort of phase here. We're definitely getting volatility, Chris, which we sort of know is a bit of a topping type of activity. You don't normally see, big volatility in the middle of a trend. You sort of see it at the lows or at the highs normally. So when you see that increased volatility, when we're up 400, down 500, and up 400, and we're having these big swings sort of day by day, that's usually kind of 1 or 2 specters. So we're not close to a buy, I think. So probably close to just a high. So yeah, so it just might be there's just kind of a signs of that sort of topping activity. So that's why I sort of think just might come back a little bit further here.
And then the Aussie. So we're a little bit different. You've got head and shoulders, which is not a pattern that you trade too much, but we have come in quite heavy. So how does that stand?
Yeah, so we never really got the shoulder there. I think we sort of rallied for that 1 week or something there, and then rolled off the following week there. So it's not really a pattern that I sort of hang my hat on there. I just thought it was pretty interesting there that we've actually expanded to the 2/3 of the range, Chris, that 166 level. So oftentimes when I see a market kind of expand, it's like if we expand 150% of the range, or pull back 50%, or you pick, if it goes sort of 1 quarter, you'll pull back another quarter. So oftentimes when I see the market go to sort of the 2/3 of the range, I'll have to see it come back to the 1/3 level, which is around that 8,100 there, which is a little bit lower here. So it's only about 4% lower. So again, not expecting nasty declines here, but if we definitely sort of cool off there, it's definitely still, some overvalued shares there. Yeah, there's some damage being done here. Some of those growth names are off, 30, 40% in our market, which is understandable. But again, they're a little bit short there. And we've seen some of those bigger names as well, sort of broke some key levels as well. So they're not particularly strong as well. So I do kind of think here that our market's likely to come back to that 8,100.
Okay, well, when you're talking about those big names, I think you probably might be talking about Commonwealth Bank. And as you said, the companies that are up between 100 and 700%, okay, it hasn't put on 100 or 700% like some of the US companies have. But for the largest company on the index to put on such a large amount, it didn't happen since August. So it's actually rolled over during that period that we were talking about right at the very start. what are the key takeaways from the Combank chart right now?
Yeah, look, it initially came back and sat on top of that early 2025 high around that 163 mark, and then we rallied for about 5 or 6 weeks. Then we've actually cut that 2 weeks ago, and then we've continued down here. So we've now sort of broken this sort of big sort of broadening sort of channel here. So that's pretty negative, actually, breaking below that channel line there. So got 3 pretty valid touches there. Probably got a few more on the upside. So yeah, pretty negative, and that's kind of broken on pretty strong volume too. So some reasonably aggressive selling and impulsive there. So that's pretty negative to me. So in the short term now, I can see us coming back to that level. So the one thing I know about markets, Chris, sometimes when they do break down, it's like a bit of a basing pattern there. The path that we sort of follow out of the low, sometimes we follow the same path that we've taken down into that low. And same in reverse for a top too. The path that we've sort of taken down here, we might follow the same path back, as we followed up here. So you can sort of see that the market, got up to that 160 odd there, that pulled back to 140, and then went up to 190. So on the way down here, you might come back to that 140, maybe try and bounce back up to 165, so like that, and then come off. Yeah, that's sort of well, we often follow the same path, sort of out as we sort of followed in. So I wouldn't be trying to buy CVA until at least get down to 140 here. And they're still pretty expensive. If you look at these things historically, there's some pretty high valuations there. So the fact that we've broken through that key trend line, pretty heavy volume, just tells me to be pretty cautious there. Wouldn't be trying to jump in too early here.
Just trying to draw almost a foldback technique there, but the dotted line in the middle, the key points being the highs, the lows that you talked about just then, and that can often happen. And I thought it was a bit hocus pocus when you first showed that to me. It's very gaffles at Falkwood, like, he's actually got something here, and I'm trying to trade it. So yeah.
No, when I read that book years ago, I think it was, I can't remember what it was called, Tripwires and Trend Lines. It was an odd sort of book there, but it talked about the Foldback technique in that book, and I sort of read it, and thought it was a little crazy as well. But then I just,
when you see it coming again,
kept seeing it everywhere coming through. So it's and it does match up to, if you think about a lot of technical patterns, so like double tops and head and shoulders, and even like a W, the Bollinger Band, the W, bottoms, and so they are sort of quite symmetrical type of formations there. So there's a lot of technical patterns that actually that
form to it.
Yeah, no, exactly. So it's definitely something to be very mindful of.
Now we are coming to borrow your expertise and understand the momentum part of the market. You've talked about some areas that you'll pay attention to, and they have performed well. I will say that we've created a whole series of people who've said new to momentum series. We'll put a link on screen here, so I want to go and learn more about those tips and the struggles that I had that I wish I'd been told earlier. I wish I'd met Gary earlier, because he could have saved me with a lot of lessons. But VEA, Viva Energy, what's to learn on this chart, and why are you bringing up in this part of the cycle?
Yeah, I think it's just, look, it's a tough market out there, Chris. We've got more stocks breaking down than up here. So probably people are trying, imagine people are finding it quite difficult to trade here at the moment. I've sort of, my view is that this growth has been vulnerable for probably about a month or so here now, and as breaking down, and we're seeing lots of, we saw lots of names in, like in October, we already had probably 30-40% of the S&P 500 trading below their 50-day moving average, and then that grew to around 70-80% only a couple of weeks ago. So even before the market really started to sort of come off a little bit, we were seeing the underlying weakness there. So it just means that like a lot of stocks are actually in pretty weak positions there. So that makes it tough to trade here. So look, I think here, if you are going to trade here in a pretty tricky market, I think you've got to up the ante in terms of your vetting, and be a little bit more, like we've had a pretty strong market there. To be honest, in the last 6 months, it could have almost been long, 80% of the market and made money here. But now we've got most of the constituents actually breaking down here. So there still will be setups here, but it's important that they meet certain criteria. Then I think the three biggest ones for me is that sector strength. Number two is the relative strength. Obviously, we want to see that stock show a bit of strength. So whether that's actually an impulsive bounce or a bit of a basing pattern there, just see some strength in the stock. And then third, really, we want to sort of start to see the stock above that 50-day moving average. So I don't think if you've got all three of those aligned, then I think it's a risky trade right now. I think the odds are stacked against you. So that's what I sort of think you want to be sort of seeing here. You want to be sort of seeing that the sector sort of shows some strength. So therefore, you're because at the moment here, we talked about this, all those sort of healthcare names and some of the defenses of the sector that started to look pretty good the last couple of weeks. And they're all popping up. It was saying Sonic Pop, Ramsey Pop, just, so all those names in that sector are actually showing some strength there. There's been a few other sort of energy names. Obviously, the critical minerals have been pretty strong as well. So those sectors have been certainly pretty strong here. So that's what we want to sort of see, the sector strong. And then we want to see that relative strength. So where the market's, it's where pay attention when the market's down and pretty weak, who's holding up strongest. So who's actually putting in high lows, who's building a bit of a base here, who's actually, or even sometimes we see a stock has some good news, Chris, and then it jumps up and then it consolidates. That's the sort of thing we want to be sort of looking for as well. So got to sort of show that sort of strength there. So whether that's impulsive or a base. And the third thing there is I think that 50-day moving average is just such key. And we know that our odds, if we're buying above the 50-day moving average, the odds are like 2-1 in our favor. So that's you just got to wait for that. I've bet a few that I was sort of bet. I've rushed into a few, maybe 3 weeks ago, and they haven't worked out. But everyone that I've waited for the 50-day moving average to be broken here lately, that all worked out. So I think it's a clear pattern there. It just means I just think you just got to be a little bit more stringent on your long trades there in a pretty tough market here. So. And so we talk about this as well. I mean, cash is a position in a weak market, so don't be afraid to hold cash. Me personally, I've sort of got 2 shorts and 4 longs on it, Chris, and I'm pretty comfortable with it. Having, not that many positions there. The ones that I'm comfortable with there. But that's the sort of key there. So yeah.
Well, I love that insight. I love this nice summary you've got here. 1, 2, 3 sector strength, positive momentum. So showing some sort of direction, and then it's above the 50-day moving average. They're all rules that I trade as well personally. I love them. That's a great summary, and that's something that I won't be taking any long trades unless they meet all of that criteria. You did mention Sonic Healthcare, so you've been following this for a little while, and got a few questions from viewers saying, "Well, why is Gary focusing on this part of the market?" He's put a lot of search into the market leaders, and he's identified what they look like before they break out. And credit to you, Gary. This is something you've traded, so well done. What's the lesson here with Sonic, and what are you looking for next?
Yeah, so the lesson is we sort of, like when growth is breaking down, and we've had clear signs of that taking place here over the last month or so, well before the high was in place. So we knew that defensive sectors will almost, this is a time that they'll often do well here. So you can't just sort of jump into them. Really sort of, you want to see them hold up when the market's down, which we were seeing, and you want to basically sort of start to break to new highs as well. So you sort of need to sort of break to a new high and above that 50-day moving average. So it just happened to be that that B wave and the 50-day moving average were broken on the same day. So that's why it sort of gave me sort of confidence to sort of trade. And it was a pretty positive update as well. So it was funny. It actually opened up below the opening price, even though it was a pretty solid result. So
Before the previous day's close. I remember talking to you on the day, and you were quite happy I got filled on that. I didn't think I'd get any fills, but hey, it normally got quite well.
Yeah, I normally don't cheat there personally, but one of those ones that seemed pretty obvious to sort of cheat on the day. It was only like 10 cents away outside. So, but it does look pretty good there. I mean, we're just seeing all those names show a bit of strength there. So that's what we're looking at. I just got to sort of see, people like say I'm bottom drilling here, but I'm waiting for the sign of strength. I'm waiting for the price to tighten up. And I'm waiting for a strong high to be broken. I'm waiting for the 50-day moving average to be broken as well. So I've got some sort of basis there. That's the three things I'm looking for. So to be honest with Chris, I actually think about trying to bring this into the model portfolio as a general rule, because I think that'll, maybe I'll get less trades, but I think I'll have a high degree of success just following this blueprint. So, yeah.
Yeah, I like that. I like it. Another one is Nufarm. So you have mentioned it before as well, sort of that bottom dwelling, undercut the lows so we can see it's come out of this box that was created recently, has turned the corner, and then shot up with a huge amount of volume. So dare say too late. How have you traded this, or what are you looking for on the trade with Nufarm?
Yeah, I haven't traded this. I just, I noticed the false break, which was something I used to trade. The retest of the lows, I thought this is sort of something I would have traded in previous years, because something I do look for is those sort of false break patterns there. But now I'm trying to wait for sort of a bit more strength. I really want to sort of see, a few higher lows, sort of relative strength, and it being by the 50 as well. So we don't have that here, but we do have the early signs here. So we've had a bit of a false break, and we've had a pretty positive update, and the market's bounced and false on it as well. So those are the first signs that you often see. So particularly, as we know, Chris, when we get a positive catalyst, and we get that jump, so we often then will get a contraction, and then we're going to high. We sort of know that, from the studies there, if you get, it's like a positive earnings update, and the price is normally going to be higher, 1 to 3 months higher, so most of the time. So not all the time, but yeah. So just know this is a, important change for stock. So we're just looking, this is a stock that's got news, it's got a technical pattern here. It's now showing a bit of relative strength. So it should be on our radar now to watch. So, but for me, it's not above the 50-day moving average yet. So it's one stock I'll be watching pretty closely then.
Okay, James Hardie, down near these lows, previously had a low here, but has recently undercut it and not been able to get further. So from a Wyckoff perspective, that may be telling me it's a bit of a spring. The volume's been excessively high. So what characteristic is going to be required to show up here for you to have confidence in trading something like that with all your false break experience?
Yeah, so similar to Nufarm, except you haven't had the impulsive bounce here yet. So this was, again, this is just on the radar, but there's so many more boxes to be ticked here. So oftentimes, we're seeing in these, this is something which does occur in these high inflationary times. We go back and look at the 40s and 70s. We did see big moves up and down within these ranges, big swings back and forth, and we're seeing, some pretty volatile markets as well. So definitely seeing this type of pattern occur quite a bit in the last few years. But so it's just on my radar to watch this here, because it has gone to a new low. We do have the signs of exhaustion there, do have volume sort of stepping in here. But again, I don't want to jump in too early here, because sometimes these can fail here, but this is now on my radar. So those two are now on my radar, because these could be potential lows there, but we need to sort of see a base, some relative strength. We need to sort of, few higher lows, and then breaking above the 50. So they're on my radar for stocks to watch there moving forward here.
And that checklist I know has come from a lot of research. One of them was in Catapult that you did a model book breakdown of, and it absolutely roared ahead. But it's in a different stage right now. If we go Stan Weinstein, possibly crossed over into another stage. We've got your ascending trend lines. I'm probably going to steal your thunder here. I love this one so much. The ascending trend line going all the way up here. And the target is quite possibly to come back to this level, $3, which you've marked on the chart.
100%. Yeah. Yeah, I mean, history.
So listening, Gary, I've been learning.
Now, well, history tells us that when we've sort of got those, we build that base and we get our sort of second or third accelerating trend lines. Once they tip over, they're going to come back to where that last acceleration sort of started for, where that, because the third, or sometimes it can be fourth or fifth. I think in Catapult here, it might be the fourth or fifth accelerating trend line. So pretty extended to the move here. So yeah, when the 50-80 rule is the minimum, Chris. So we'd come back from 760, 765, something like that. So we should sort of half of that. We're not far away from that road. Probably only maybe 4 or 5% away from that 50% rule. But that's the minimum that we would see. So for some of these sort of leading sort of growth names that break down, certainly there that extent. Since I've been in the markets and since I learnt this from McLaren, I just haven't seen one not come back there. So that's just telling me here that not to buy, not to look for this stock here until at least gets back towards that sort of $3 mark here. So that's just telling me here we've still got further to run here. We've had a pretty decent impulsive move, but we don't go down in a straight line all the time. We'll try and bounce here and try and put some sort of shoulder in, and then yeah, exactly. So it might take a little while here, but sorry, just got to be careful trying to buy these momentum names too early here. If we look at how they trade in the past and the size of the pullbacks, we haven't fulfilled any of those rules here yet, not the minimum. So we've had a decent pullback, don't get me wrong. We've had some 30-40% pullbacks, which seem pretty large, but you lay them out historically, they're shy of where we normally get back to. So there's no rush to come in here.
Yeah, Xero, this one has been loved and hated along the way, but its share price, well, 196.52, you've got marked up here. 50-80 rule, well, that's under 100. So talk us through what you're looking for on this chart.
Yeah, so I thought Xero was interesting, Chris, because probably when one of the first stocks to turn down. It's actually been one of the weaker growth names. So it's sort of started its decline prior to most. So it's been weaker than most of the other growth names as well. So it's kind of led the growth names down in Oz here. So if that's led early, we know that that's going to at least have the 50-80 rule. So so 24th of June was the high there. So while the rest of the market's making highs in October and November, so this is already was trending down relatively before that.
Rolls over.
Yeah, so we kind of expect this one, because it's been trending down quite a bit here, this one should be at least meeting the minimums, if not more, because it's sort of perioding early. So that 50-80 rule still a fair shy, still shy of that. It's only about $98, would be a 50% price there. So we're still sort of shy of that. Probably come back to where that October 23 low. That's probably around there. That's probably the marker there. So we want to sort of see it. Yeah. So again, everything's telling me not to rush into these growth names that have been, feel like they've been poleaxed there, but history tells us that they normally come back a bit further.
Okay, well, this one you did get some hate mail on, which wasn't great. It's not nice to get, but that was your opinion at the time that this thing would probably fall significantly, and you were right. And like you said, it came down, just as you were saying, they can sort of get a bit choppy along the way, but they do end up trolling back down. Field did. So that's exactly what happened. Go back and have a look at the videos. That's what Gary was calling back then. And you called it sort of around here as well, that it would at least come down to the last trend line. I can't see it drawn on this week, but
the $3 mark, is the last. Yeah. So on that DroneShield last time, you can't really sort of see it on that that early top there, but that had 3 or 4 ascending trend lines as well into the peak, and then it rolled.
It was also in another bottle book.
Yeah. So we know when that, we know when they break those vertical trends, or what McLaren referred to as a blow-off move, is that they will come back to where the last acceleration point started all the time. And sometimes they can come back even deeper, come back to the second one here. So it was interesting that DroneShield actually exceeded the first acceleration point and actually came back to the second acceleration point, sort of. So we've already broken below. So we've already, we've met the 50% rule already, Chris, on this one, which we did previously as well. We had a much larger than 50% decline. But it's interesting here, the second support line was the one that it got to last time. So, and we know these stocks and stuff have got personality. So whether they follow the 10-day or the 20-day moving average or 50-day moving average, they've all got their own personality. They tend to history often sort of repeats, So it's interesting.
Mark Twain.
Yes. So it's interesting here that just tells me to be a little cautious there. The last time we came back to the second accelerated trend line, which was about $1.15 on DroneShield there, and like to date so far, it hasn't shown too much strength at all, Chris. It's been pretty weak here. So I'd be a little reluctant to be trying to jump in too early in this one. I'm sure plenty of people have tried to out there, but this is telling me here that probably 115 looks likely to come back to here in this move here.
Okay, so a different space. You started off with Commonwealth Bank on the individual shares, but we've got Bendigo and the regional banks. Different chart, not a market leader in the sense of market capitalization, but has been good performer and, well, I'm not going to say the best yield because banks really have that flag, hold that flag anymore. But what's happened here with Bendigo and why has it caught your attention with a little bit of possible target highlighted here at $9.50?
Yeah, so they're not normally sort of momentum based, the other banks, but they certainly have been the last couple of years in the Aussie market. We've been some, I've been around for a couple of decades here, Chris, and for a couple of decades here, these things traded in like a 3 or 4 point, earnings multiple range, and maybe didn't move more than 10% in a single year. So we've seen moves well beyond that in the last few years here. So, but the one thing about these sort of false breaks and margin new highs, margin new lows is that on the weekly, when they sort of go back and retest an old high and do a marginal new break, that gives you a target of the last swing low, which in this case is around 950. So when I first started looking at this, so these sort of false breaks and coming back and retesting those lows there, wow, they seem too large, but invariably again, it's probably not as successful as the blow off or the vertical trend sort of move, but the odds of coming back and retesting those prior lows are pretty high. So I'd say there's a few that haven't, but it's been quite a lot who actually that do come back down there. So the fact that we're already off pretty impulsively already, pretty heavy volume, probably 2/3 of the way there, that indicates to me that this can probably get back to that 950. So again, I wouldn't be trying to buy this until we got down to those levels. So everything from a measurement point of view, whether I'm looking at growth names, the weak growth names, the strongest growth names, even some of the non-momentum sort of shares have gone a little crazy here. The targeted moves are all sitting a bit lower here. So we'll get a few bounces along the way. We'll maybe get a few counter moves there, but everything's telling me do not rush into this market here in some of these sort of weaker sectors. So you just be careful trying to buy these deep lows. I would be much prefer to go back and just try and look at what sectors are holding up the best, look at what stocks are building, showing some strength. So whether that's a positive update or building a bit of a base first, and then really, trying to be above the 50-day moving average there. It's just going to increase our odds of success. There's not, there's more stocks below the 50-day moving average at the moment than below, and because the market is as well. But they're telling us the subset we should be looking at is a lot smaller. So that's okay. So that's the way the market is. So at the moment there's less trades on offer there, but there's still a few things in place there. So unfortunately, what those defenses, Chris, they're probably not going to move as fast as some of the momentum names. And as we've seen here, that we're already down on, and those biggest movers were already off 40% across the board. So we know that the ones that move up the fastest, they move back down just as fast as well. So it can be some pretty decent moves on the downside there. So don't underestimate how far back some of these momentum and growth names can pull back there. So get your list of stocks you want to own. And that's probably something I'll try and cover in the next couple of weeks, Chris, is looking at some of those better momentum names, maybe hopefully the ones that maybe hold up the best there or come back to sort of some key levels. But the names that I'd like to be sort of trying to hold here in the next few weeks there, if we were to sort of see some of those targeted levels get hit. But just important to sort of see which stocks hold up the best moving forward.
Well, that'll be something to look forward to. At least I know you've prepared that many times before with the previous October lows that we saw, and that was really helpful. What we'll put on the screen here is Gary talked about the leading sectors, and one report that really opened my eyes up to the importance of trading only momentum leaders in the top sector was one from Thomas Bolkowski, where he called it the Holy Grail. So if there's going to be an indicator for momentum trading, this was it. Put a video there on the right-hand side where we've gone through that in great detail and say thank you, Gary Glover from Novus Capital.